Hey guys, what's going on? Welcome into the video. So we got some important things to talk about in this one, as the stock market is at a very important inflection point right now. We're going to go through the technicals of the broad market and some scenarios to watch for next, go through some data that's going on behind the scenes and some risks to the market, and then talk about a bunch of individual stock setups and trade ideas. So without further ado, let's go ahead and get on into it, and as a reminder, there's always timestamps in the description. So starting out and taking a look at the S&P 500 chart, this is the major technical setup that we talked about last week, with it set up in this megaphone or broadening wedge pattern. So my opinion on how this would play out is either a sell down to 4,040 that gets bought up and sees a strong reversal back to the upside from there, or a break higher towards 42.35, finds a top around there before a strong sell starts. And that scenario is exactly what so far played out last week. The S&P broke out and rallied near that target, hitting a high of 42.27, just a few points off that 42.35 sell target before starting the pullback to end the week. And before we talk about some scenarios to watch for next, let's take a look at how the breakout played out last week. This really shows the power of simple technical analysis. This trendline acted as resistance for 5 days and rejected 7 different times in that span before breaking out above and seeing an 80-point upside move in just 2 days. It really does not get more simple than that. So getting back into the broader setup, on the downside I'm watching 41.50 to 41.65, which was the previous breakout area, to now act as new key support. As long as the market holds above there, the market can push higher. Maybe we see a scenario like this where it pulls back further next week, retests and holds before making one more divergent high around 42.40 before topping and starting the true downside move from there. Or a scenario like this where it ends up visiting the trend line that marked the 2 previous swing highs for the market before topping from there, which would be at around 42.65. The scenario where the top would likely be in already would be if 41.50 breaks and holds below from here, and from there much larger downside could get started in my opinion. So overall, my opinion on things right now is a midterm top is either in or very close to being in for the broad market, and I'm watching for anywhere from a 4 to 12% pullback for the S&P. Overall, I do think we have seen lows. I would not be surprised to see a little bit more than this or a little bit less than this, depending on how the market reacts and if breadth can improve, which the next point, we need to see market breadth improve. If we just see the same 5 megacap stocks leading the market higher, that will not be sustainable, and the market is going to head much lower. Something very healthy we could see would be the Russell 2000 outperforming versus the S&P and Nasdaq underperforming during a time span to where those smaller cap companies can catch up. Those mega cap valuations can come down to a much healthier level. A few more worrying signs under the surface include this now very large divergence between the 20-year yield and the Nasdaq. As you can see, these move with each other for the most part, and starting in late April, this divergence started and now is massive between the TLT and the Nasdaq. This is very likely to correct, and of course, if so, it would likely result in the Nasdaq heading lower. And this is another good data point from Tier 1 Alpha on market breadth, showing that less than 40% of companies in the S&P 500 are outperforming the index itself, and is of course led by a small group of tech and mega cap stocks. The current breadth level ranks in the 3 percentile over the past decade, which is unhealthy and unsustainable of course, and this is just breadth from the S&P. With small caps, things have been much worse. Alright, so now taking a look at some of the mega caps that have been the main catalyst behind the market rally, and these are obviously going to have to pull back and drop for the broad market too as well. So starting out with Google stock, we talked about this one as a breakout setup a few weeks ago, and that played out and more, rallying all the way up to the 123.2 to 124.8 key resistance zone, while also being heavily overextended. This also put in a potential bearish reversal candle on Friday with the inverted hammer, and has a good chance to follow through to the downside from here for a healthy pullback at the very minimum. Next up, taking a look at Apple stock, it's still in this large rising wedge pattern and is now testing the supply zone above at 176.2 to 177.5. Another very likely pullback setup where a larger move could start down once that trendline support of the wedge breaks below. Taking a look at Meta stock, another similar setup as others, it's overextended, overbought, and testing this key zone at 244.5 to 247.8. 244.5 was that previous double bottom that happened in 2020 and 2021, and 247.8 was the start of the gap down in February of 2022. Once again, another likely area to start a healthy pullback at the very minimum to cool off that recent trend. And Nvidia stock has been on a straight ripper since the start of 2023, and this is the stock that I've been most wrong about by far this year, thinking that it would top around 260, and now here it is sitting near 320. The stock is insanely overvalued, no doubt, but of course that does not matter until technicals and price action agree. 320 to 323 is the next key resistance zone above, and it's going to need to break back below 290.2 to fail its recent breakout and start anything more than just a healthy pullback. And then Microsoft stock, another one that is heavily overextended here and is attempting to break above the key 316 to 317.5 zone, with 320 just above as another psychological level. For downside to start on this one, we'll need to drop back below 316 to potentially start that pullback phase to retest that previous breakout zone around 297 to 300 as the big spot to watch on the downside. So that is everything that I'm watching for in the week ahead. It is very likely we see some volatility pick up in the market. We either need to see small caps catch up and mega caps pull back, or everything may just fall if things do not correct soon enough. Hope you all enjoyed and hope I provided some value to you in this one. If so, make sure to hit the like button and subscribe button down below. For anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and more. And I will catch you all next time. Good luck trading this week and peace out.